Hello, everyone, and welcome again to Real Talk Office Hours for this Monday, May 11. It's presented by Startup Grind Grand Rapids. And a quick intro to Startup Grind. We are the world's largest startup community with over 600 chapters in over 125 countries, working with a mission to educate, inspire, and connect. We do that through three values. That's making friends, not contacts, help others before you help yourself, and give before you take. And it was in that light that George came to me and asked if I thought it'd be valuable, if I'd be interested in hosting an update on global markets and an expert roundtable where entrepreneurs and leaders could come and ask for actionable advice. Fact is, majority of entrepreneurs today didn't have to lead through the last recession, the Great Recession. They weren't CEOs during the dot-com bubble, and they're just simply unprepared. How are they expected to do anything but follow their guts or the reactionary examples of their peers or who they see and read about in the news? In a world of alternative facts and fake news, we should be informed, rational, analytical, and rigorous in our thinking. The pandemic has been and will continue to be the great global leveler. We invite you to join us live every Monday, Wednesday, Friday at 1 p.m. Eastern Time as we track the intersection of facts, bias, and action through the analysis of global markets, followed by actionable advice given to entrepreneurs desperate for advice as they do their very best for their businesses, teams, and families. If you missed the live events, you can catch the recordings at startupgrind.com/grand-rapids. And then they'll be available on YouTube as well as Spotify, Apple Podcasts, and elsewhere. First, a little bit of housekeeping before I introduce George. Comments made and views expressed by all participants in this podcast are not intended to invite or incite individuals, entrepreneurs, or investors to buy or sell financial assets, real assets, commodities, futures, and/or options. The purpose of this podcast is to educate and to inform, not to trade or to invest. If you feel compelled to trade and/or invest, please call your broker. And with that, I would like to introduce to you George Katsanos, our presenter.
Thank you, Corey. As usual, I would like to start, please, with the markets. I would like us to have a quick review of what is going on in the financial markets. Here you can see the structure of today's presentation. I would like to then move over to the gradual opening up of the global economy, and two spots of attention. One is the new normal, but this time from a medical perspective. Donald Berwick wrote an article a few days ago in JAMA, in the Journal of American Medical Association, where he talks about these choices. And the last point for today is going to be higher education in the US, particularly the challenges that we will see ahead of us. Let's move to currencies. As we have said before, currencies are the starting point in our analysis every day of the week. And the reason we look at currencies is that in currencies, more than any other asset class, we see not only fear and greed, but expectations. We also know that currencies are sensitive to political news, economic news, financial news, dislocations, and more important than that, expectations. As we have said before, there's two big schools of thought in economics. One that assumes that economic participants are rational individuals, and the second being the result of Daniel Kahneman's and Amos Tversky's research about prospect theory, suggests that economic participants or participants in any economy are not rational. So in that sense, whichever way you follow it, you will see rational and irrational expectations and fears reflected in the financial markets. Today, as you see very clearly, the dollar has remained relatively stable against most of the currencies. It remains relatively strong. And the reason for that is because we are now entering the second stage of the global pandemic. Again, the second stage is my arbitrary way of thinking. Apologies for that. The first stage, what we call the attack. The attack meaning we got hit by a black swan. by an unexpected event that nobody had actually placed on the horizon, with the exception of perhaps Bill Gates. Once the first stage has taken us through the pain of death, destruction, calamity, and social distancing, we're now coming to the second phase, which is the opening up. In this phase, we will see significant, and I mean substantial, differences in a whole range of issues from country to country. As Dr. Berek notes in his article, we're talking about speed of learning, the value of standards, working conditions, including the protection of the workforce, proximity, preparedness for threats, and inequity. All these issues are going to be with us throughout the next several years, and you will be hearing voices and views from most participants about these issues. Remember, please, that after currencies will go into bonds, and the reason we look at bonds is because bonds are considered to be a safe haven for most investors, because these bonds are promises by governments to pay the investors in their own currencies. So when you see India being at 6.17%, that means the Indian government is promising to pay rupee investors in the 10-year bonds of the Indian government 6.17%. You may also recall that on Friday, as the market was closing, the Indian 10-year bond was trading at under 6%. So we have a slight change of 20 basis points, which is 0.2%. Not big change, but still it suggests that some investors are expecting some form of retrenchment in the fixed income market. In other words, as the economies are beginning to open up, there is positive thinking. Investors are preparing for return to some kind of normal, whether we call it new normal or next normal is academic, but they're expecting that we will go back into new normal. And as the economist suggested last week, this normal may be 90% of 2019 GDP. We will explore this issue of how much will we be able to recover in the next several sessions of Real Talk. But what is important to note here is that for the most part, 10-year bonds remain well bid, meaning the investors still favor them. The same thing in Europe. In Europe, you will still have negative 10-year bond yields in Germany, 0.5%, Switzerland, 0.6%, and France, 0%. Netherlands, minus 0.25%, whereas Greece and Italy remain as outliers on the higher percentage for 10-year investments. Greece at 2.14% and Italy 1.9%. The US is again experiencing a mild sell-off. You remember our 10-year bond has been near 0.6%. Today it stands at 0.7%. Canada is at 0.57%, relatively unchanged, and Mexico is barely unchanged, under 6%. When we look at the equities market, we see that Asia Pacific closed on a positive note today. The Nikkei was up 1%. The Hang Seng, the Hong Kong Stock Exchange Index, was up 1.5%, and Australia was 1.3% up. Generally, the Morgan Stanley Index for the Asia Pacific region was up 1.8%. Europe, on the other hand, was more mixed, with the exception of the UK, which was essentially flat. The rest of Europe was mildly negative, except France, that was down 1.3%, and Spain 1.6%. Remember, please, again, and we'll talk about it in a moment, different opening up processes will result in different outcomes. And it is very likely that we will see pullbacks. In the Americas, we have seen that, particularly in the US, the Dow Jones Industrial Average is flat, unchanged. The S&P is up 0.2%, Nasdaq is up almost 1%, and what we see is that the commodity picture is really relatively unchanged. West Texas Intermediate is at about $24.50, not far away from last Friday's close. Brent is at $30 a barrel. Again, it is up significantly from last week when it was trading in the low 20s. Natural gas in the US is trading at $1.8 per 1,000 BTU units, and gold is at 1,700. I don't want to go into too much detail at this level about other precious metals, except copper, which is trading at $237. It's down 1%. I mentioned before, copper is a good indicator for global industrial recovery. Keep an eye on copper. Higher copper prices means Chinese manufacturing is picking up. It means the global economy is beginning to work its way through the crisis again. On the other hand, corn is essentially unchanged, only 0.5% compared to Friday's close. Wheat, the same story, and live cattle has taken a bit of a hit, down almost 3%. This is because of the fact that everyone is making an effort to bring animals back to the production line. Having gone through these market performance issues, I just want to highlight one question that friends of mine were asking me over the weekend. Why is chicken plentiful while beef is not? And the simple answer is industrial manufacturing. I'm sorry to say that, but the chicken we eat is industrial manufacturing product. I will put this article on our Real Talk page for those who are interested to read, but it is very clear that most slaughtering of chickens, unlike that of cattle and hogs, is automated. Deboning and cutting chicken into pieces is often done by hand, which is why there have been some shortages of boneless chicken. But machines are now able to do that work too, and processors will surely buy more of them in the coming years. Quote, chicken farming has long been the most industrialized of American agricultural operations, and it keeps getting more so. The birds are bred for maximum meat production and raised in a matter of weeks in controlled indoor environments by farmers under contract to the likes of Tyson Foods and Pilgrim's Pride. The animal's small, uniform size lends itself to factory-style slaughtering and processing. The second point that I want to raise today is education, higher education. All of us almost here in the US have friends, acquaintances, relatives who are either attending higher education or intend to attend higher education. The news is particularly disturbing because this crisis will make it very difficult for the old model of higher education to move forward. The vast majority of colleges and universities, both public and private, will soon face a shortage of two key sources of finance: foreign students and students paying high out-of-state tuition fees. The crisis thus threatens the financial model that has sustained many schools and will force some to downsize, cut programs, or go out of business altogether. These developments will be bad news for American research and development, and also for the many towns and cities that rely on universities as engines of economic growth. This is one other effect of the crisis of COVID-19. Let me now turn very quickly to what Dr. Berwick mentioned in his article. The article will be put on the Real Talk website for all of you to read in detail, but there is 2 points I want to highlight here. Point one, the pandemic nominates at least, excuse me for 1 second, I would like to bring this for everybody to read. Okay, let me zoom. There you go. The pandemic nominates at least 6 properties of care for durable change: speed of learning, the value of standards, working conditions, proximity, preparedness for threats, and inequity. We need to change, and we need to start thinking in terms of change now. This pandemic has exposed our speed of learning. We need to catch up. We need to focus. We need to be multidisciplinary, and we need to listen. The second point is the value of standards. Sometimes we forget our standards. It is very important that we maintain standards in behavior, to start with, in integrity, in compassion. Working conditions are the third point that the doctor highlights. We need to take care of the workforce. It will be expensive. When I go through some of the retailers, whether they're supermarkets, whether they are Home Depot, Lowe's, or Menards, I see masks everywhere. I see bottles of hand sanitizer everywhere. I see goggles everywhere. These are very important protection measures to start with. They're not the end. We need to continue protecting the workforce. Otherwise, we will suffer. Virtual care is the next great lesson. Proximity is not necessary. We don't need to be going to our doctor every single day or every time we feel unwell. We can use all kinds of virtual care opportunities, and we should use them now. We should become familiar with these issues. They will become mainstream going forward, and they may well lead to lower costs. The next point that the doctor is talking about is that threats such as COVID-19 are not unique. They will probably appear time and again. We should be prepared for more of these types. Finally, we as a society, generally speaking, not only as an American society, but also as a global society, we need to look into inequity. And we need to understand that we need to fight the unequal toll on the poor, the underrepresented minorities, indigenous people, marginalized, and so on and so forth. Last point. Fate will not create the new normal. Choices will. Will humankind meet its needs at the tempo the COVID-19 related morbidity and mortality demand? Please read this article. It is very, very important. Thank you, and I wish you a good afternoon.
Thank you, George, for the review and also for bringing these articles to our attention. You forwarded me this one from Dr. Berwick over the weekend, and I found it very, very compelling. Specifically, the distinction between all of these things that we just spoke about, they're not predictions so much as you said, also they're choices. And then just popping into my email inbox is a McKinsey report on tracking customer values over this last few weeks, even months. And as we are entrepreneurs challenged with reopening or getting something started, we have to really be tracking those values so that we are relevant, remain relevant, or can pivot to relevance. And then combining those two, the Berwick and McKinsey, as entrepreneurs, we're challenged, or I challenge every entrepreneur listening, to make these micro choices in their own businesses and in their own lives because that way, that way we can contribute to those 6 distinctions that you had mentioned. And both those articles, along with the supporting documentation, those will all be in our notes for today's presentation. Is there anything else that you wanted to cover?
No, I don't have anything else to cover, but I just want to emphasize once again, past success is not a good indication for future performance. We need to embrace change once again, and we need to start pursuing change in order to benefit and capture the values of learning from this crisis. Thank you very much for organizing today's events. Correct.
Absolutely, and thank you everyone for tuning in and also catching the recordings. You can join us 1 p.m. Eastern Standard Time, and you can find out details about the events, and then of course all of the notes at startupgrind.com/grand-rapids. And then we will see you in a couple days, Wednesday at 1 p.m.
Thank you, everyone.